Let me jump in here to Roundhill. Long story to tell you that I didn't post last week, but I've gone in and filled in all of the pertinent data. And as some of you pointed out to me when YBTC first shifted, I wasn't even tuned into it. I was like, oh, well, that's a small distribution. Well, no, they've changed to doing weekly like their three big index funds. All right, so let's go do my traditional stuff first, and then I'll get into XPAY and YBTC and a couple of other things. So what did XDTE? So what I didn't do a video on is this 115. The fund week to week went down $1.25 from 50.61 to 49.36, but it had a nice distribution of 0.368, which was a 38% yielder on an annualized basis. Okay. So this week was a lower payment. All of the payments were down. I think we had a 21, a 20, and a 24 between QDTE, XDTE, and RDTE. All right, so we're jumping to this one. The fund itself is back up. Stock market's very high. So up 147, right, after having been down $1.25. So it's like, and literally that sometimes that sums up. People always ask me sometimes, oh, I don't have time to trade, or I'm not a trader, and I get it. But it's amazing how these things just go back and forth, back and forth. It's like finding a stock trading in a channel and saying, hey, I always buy it when it drops below 3, and I always sell it when it gets to 4. And you look at some chart for a 5-year pattern, those don't hold forever. They do that for a certain period of time, especially with a tight channel like that, $3 to $4. And then one day they're going to be $1, or one day they're going to be $7. Just the nature of the beast. But you can certainly play it for a while. All right. So on these yields down, right? I mean, the 38 was nice. 21, well, we did have a 19, right? I always try and go back and look. We've had a 15, right? A 1504 and so forth. All right, so that's your S&P. That's your XDTE. Now we're getting more and more and more data, right? The more this thing gets into a full year, the more applicable that you can at least say that's that year. But again, 1 year from the next, let's see if we get this melt up. Let's see if, you know, the new government's approach to things really yield. I mean, we've got a lot of debt as a country, but let's see. I'm still optimistic that positive things can happen. Here we have 24 cents. So that would be a very low payment again for the NASDAQ 100, but it's still yielding 31.50. Same kind of thing, was down a buck 46 the previous week. And I do see that consistency. Once in a while you'll see the Russell didn't go down as much, or it went down more, right? But generally, if it's a bear market and there's sellers, they affect all the markets. They're just subtle differences. Where is the Russell from a valuation long term standing to the S&P 500 or the NASDAQ 100? So all those interrelationships matter. So 24 cents down from 33, but decent. And I always summarize this for you guys. Charts aren't involved yet because we haven't finished the month. This will be a 5-week payer month, right? I said to you every third month, and I'm going on the pay date. So you notice that we had a 1.3, a 1.10, a 1.17, a 1.24, and we'll have a 1.31, assuming that works out. Yeah, that's a Friday. So we will have that as a pay date, and you'll be paid 5 times. And again, do I do it 5 times on declaration, or I do it on pay date? So I'm doing it on pay date. So I'll update all the charts so you can see them relative to that, but things are moving along. Let's look at the Russell. So the Russell is sitting here with 20 cents. So the lowest payer, but it's also, that's not fair when you say XDTE, the S&P 500, is the highest price. It's a $50 investment. These other investments are $40 investments. So you have to look at that. That's why your yield varies, right? So this one for this, I mean, versus 37 cents, that's cut in half, right? It's actually more than half, but at least the fund was up some. All right. So on XPay, I just wanted to point out, I wasn't sure. So what XPay is this target 20, this return of capital focus. Now this pays monthly, but what they do, and I wasn't sure if it's going to be quarterly, semi-annual, or annual. They look like they're doing it annual because it came out last year, and they said, "Oh, we're going to have two payments in November and in December, and they're going to be 0.972333, right? Targeting around 20%. These were the prices of the XPay fund." Well, then they came out and they paid January, and I didn't look under the covers that well. But now I see that this 952845 is planned for the year. Well, when I say plan, what would happen if the S&P took off and went up 40% in 2025? Then this thing is targeting 20%. You would see, okay, either the fund move up in addition to what they were paying, right? So they can adjust one way or the other. If they're paying you a 20% yield and they're saying that's what we're going to pay no matter what, well, obviously, if the NAV goes way down, you're going to be impacted by that. So there's still potential an impact of quote the stock market. Just understand that. So I came in here, even though it's not paying right now. Its pay dates are well labeled. I just went out through 5/7 being the X date. Remember, declaration date. It's not relevant because they declare ahead of time, right? They're telling you all the way through this year they plan on paying 95 cents once a month. And then you just go look up the pay dates on the Roundhill website. All right, guys. So 57.85, it's right in the range. It's been 29, it's been 93, it's been 58.05. I just picked today's date because this happens to be declaration date for the three index funds and YBTC, which I'll cover in a minute. So let's go do the summary. How's it all looking? All right. So this gets rolled up. So here we are with two inception dates the same for XDT and QDTE that you guys know. But Roundhill on the Russell came out on September 10th. So the only reason I bring that up is that their period of time. So look at when you see dividends $11, $13, and this is 5.7, you may say, oh, well, that's not as good a payer. Well, why is the dividend annual yield showing 37.58? It's actually been a better payer. So you take its number of days, right, which it's been paying for 134 days. Could have bought the fund and then received payments, okay? So up to today's date, it's 134 days old. So use a multiplier, right, as a percentage of 365. These two are 321 days old. So you'd expect more payments, right? But this is a bigger payer so far. Now, interesting, they all three have some NAV erosion. I mean, this is minuscule, right? 0.33, less than, or really a third of 1%. And if you annualize that from the 134 days and make it 365, it said if it kept that same progress, it'd be less than 1%. So that's non-effective. So your total return projects out to almost 37%. Now, these guys are the ones that I always tell you guys I find fascinating. To me, there's an argument both ways. For those of you that say, let's say two funds produce the same total real return, but one pays me a lot more. One pays me, I'm making it up, 50% annualized dividend return, but it has a 20% NAV loss. So I have a net 30% gain. Another one pays me 30% and is flat on the NAV. It's even. Well, 30% is 30%. They both really return the same in total return. But some would argue that are getting the money. I'm getting that money along the way. So I like that 50% yield. Yeah, I'm getting the NAV loss along the way, but I'm just holding. Now, if you're constantly trading and you're buying in and buying out, then you're realizing gains and losses all the time, right? And certainly I believe if you're holding it for the long term that these ought to be, direct cost average. You ought to be buying at different times. Buy when the market's on fire, when it's bleeding, right? When nobody wants, everything is throwing the baby out with the bathwater, right? You gotta buy sometimes on those awful days when things are looking, versus you go in and buy and say we hit a new all-time high. Well, if we hit a new all-time high because there's certain events that are projecting this is going to last for 3 to 6 months, it's like Nvidia's come back into vogue now. I've got to sit down. I've been on this vacation, but really restudy it and see if there's enough there. I was always worried about the other hardware providers coming in and capturing some of it, but they seem to have some advantage again, a significant advantage. And that may be a year, two, three. So I need to really restudy it. I know that's off topic a little bit here, but that's what happens. There's no just set and forget, right? That's why it cracks me up when people look at Roundhill, Yield Max, they look at these and say, well, are you going to be there for 10 years? I've been getting on Misty, I've been getting an 80% annualized return. And I want to know if I can get that for 15 more years in a row and then I can retire. I'll take all my money and put it in Misty. Well, that'd be a horrible, MicroStrategy is one of the most aggressive and can be an extremely high flyer, right? But with risk there's reward, and with risk there's risk. um, so you have to have a balanced thing. So that's why these index funds, by the very nature, and to me, that the S&P 500 is your more balanced approach to it. But I get the argument, right? 21% versus 19 and a half. Those are really close. But I'm paid more here, right? But I'm losing more here, significantly more here. Okay? So that's what all those do. So hit me up again with comments or questions. The other one that so this is all your individual data, right? That's where it all comes from. And then let's go over here to YBTC. So the fund started now weekly, right? Otherwise, if you go and you say, oh, they're only yielding 8.68, 8.19, 12, right? Well, what you simply, when you have 52 weeks of being paid, of something being paid, then divide that by 12 months and you get 4.3. So essentially, I go over here and I say, okay, well, I got 34 cents, I got 38. There's a little bit of anomaly because it's some of year end. And say I just took the midpoint of the last two payments and said, okay, I'll make it 36. Well, 4.3 payments of 36 is a buck 55. And you look here, I've got $2, 177, 163, 103 back when I was paying monthly. $1.84, 91. It's probably on par with what you can expect. Again, Bitcoin's right up there near its all-time highs. I think all-time high is 108. So is this a breakout thing to 125? 130 now, and then that's kind of a topping in the next weeks or months, and it pulls back into the 70 range and sort of tests the breakout. And so that's so hard. I'm not here to tell you that there's plenty of people that report on all of that kind of stuff alone, to charting and other stuff. I certainly will get back after I'm back from my trip and get a little more attuned with what's happening in the market. But I wanted to show you that and tell you that I had done the YBIT comparison, okay, but I haven't updated it, so ignore it for right now. It's just clear to say that Roundhill has a much, much, much better fund for BTC if you want yield income, right? I was not a, I was a fan of YBit when it launched, but I thought they did a horrible job with the BITO, and I guess, you know, they're doing some IBIT, but I think it's still mixed, you know. So we shall see. I'll continue to report on that in its respective group. Okay, guys, that's what I got for you on Roundhill. Hit me up with anything I missed, but I think that gets you up to speed. And then on the next payment, I'll update my monthly charts. And that helps sometimes. People that ask me, how's everything relative? Because when you're getting paid weekly, you got so many past weeks. I can go in and highlight and say, oh, this is within the top 2 or 3 payers, right, of the last 30 weeks. But sometimes the monthly charts, and then you also have to know when they're a weekly payer, which monthlies had 5 week pays and which had 4. Which I said to you, every third one is a 5 week payer. All right, guys, this is Bruce with Targeted Wealth Creation. Hope all is going well. This is not financial advice. I'm not a financial advisor. This is for fun and entertainment. Have a good one, guys. Bye for now.